Hello, everyone, and a very warm welcome to the day one of our comprehensive 15-day journey into the fascinating world of marine cargo insurance. Today, we are laying the foundation of dividing into the core questions: what exactly is marine cargo insurance? And perhaps more importantly, why is it not just a good idea but an absolutely essential component of the modern global trade? Think about the sheer volume of the goods that move across oceans, skies, and the lands even single day, from the clothes we wear to the food we eat to the raw materials and that fuel the industries. This incredible movement of goods is what enables our global economy to function. However, this journey is really without risk. Shipments can be damaged, lost, or delayed due to multitude of unforeseen events, from natural disasters and extent to thefts and piracy. That's where marine cargo insurance steps in. It acts as a crucial safety net, providing financial protection against these inherent risks. Throughout the session, we demystify its purpose and scope. By the time we conclude today, you'll not have a clear idea understanding of what marine cargo insurance is, but you'll also grasp its indispensable role in ensuring that goods reach their destination safely and their businesses are protected from potentially catastrophic financial losses. Furthermore, we will explore how this vital protection extends across the various modes of transport, whether your goods are traveling by sea, air, road, or rail. So let's begin our exploration into unlocking global trade through effective cargo protection. Now let's break down what marine cargo insurance actually is. At its core, it's specialized types of property insurance, but with a crucial distinction. It's specifically designed to protect your goods only when they are in transit. Imagine you have a valuable product in your warehouse that's typically covered by your general property insurance. However, the moment that product leaves your warehouse to embark on its journey, whether it is headed to a customer across the city or across the globe, it enters a unique risk environment. That is where marine cargo insurance steps in. Its scope is incredibly broad and vital. While the name marine might make you think only of the ships, this insurance has evolved significantly over centuries. It now comprehensively covers loss or damage from a wide range of perils that your cargo might encounter, regardless of the mode of the transport. This means if your goods are traveling by a massive cargo ship across an ocean, soaring through the skies on a cargo plane, rumbling down the highways in a truck, or transferring continents by rail, marine cargo insurance is designed to provide protection. These perils can be anything like a storm at the sea, an accident on the road, a fire in the warehouse during transit, or even theft. The ultimate purpose of this insurance is to provide you, the cargo owner, the financial security. In this complex world of international trade, countless things can go wrong that are completely beyond your control. Without this insurance, if your valuable shipment is lost or damaged, you could face a devastating financial setback, impacting your profitability, your ability to fulfill contracts, and even your business's solvency. Marine cargo insurance essentially transfers this financial risk away from your balance sheet and onto the insurer, ensuring that if something unforeseen happens to your precious cargo during this journey, you won't suffer a crippling financial loss. It allows you to trade globally with greater peace of mind, knowing your goods are protected. Now, why is this insurance is not just a nice to have, but a must have? First, it's about risk mitigation. Shipping goods globally involves many risks. Accidents like a container falling off a ship, theft from a warehouse, or natural disaster like a hurricane. Marine cargo insurance acts as a shield protecting your business from the huge financial losses through these events can cause loss. Secondly, and this is crucial, are carrier liability limitations. When you hand over the goods to a shipping line, airline, or trucking company, they are responsible for your cargo. However, their responsibility or the liability is often very limited by the international laws or agreements. For example, if you a ship electronic worth rupees 1 lakh dollars, then and they're lost at sea, the carrier might only be legally obligated to pay you a few $1,000s based on the weight, not the actual value of your goods. This means their compensation often falls far short of what your cargo is actually worth. Marine cargo insurance bridges this gap. Third, consider global supply chain vulnerabilities. Your goods often travel long distances, sometimes across oceans through different countries, and are handled multiple times, loaded, unloaded, transferred. Each step is a very potential point of failure. Plus, they pass through diverse environments from freezing temperatures to humid climates and even potentially unstable regions. And these factors introduce unique risks. Finally, having this insurance provides financial security and ensures business continuity. If a major loss occurs without insurance, it could be a devastating financial blow to your company. Marine cargo insurance ensures that even if something goes wrong, your business can recover quickly, preventing severe financial setbacks and allowing you to continue operating smoothly. When we talk about marine cargo insurance, it might sound like it only covers shipments by sea, but that's not the case. It's a broad term for goods in transit regardless of the method. Ocean freight. Yes, this is the most common. It covers your goods when they are on large cargo ships crossing the oceans. Air freight. It also covers shipments transported by airplanes, which is often used for urgent or high value goods. Road and rail freight. This covers the land legs of a journey. For example, your goods might travel by truck from your factory to a seaport, then by ship, and then by train from the destination port to the final warehouse. Marine cargo insurance can cover these inland parts of the journey too, even purely domestic road and rail transport. Multimodal transport. This is really important. Many international shipments use a combination of these modes. Marine cargo insurance can provide seamless door-to-door coverage, meaning your goods are protected from the moment they leave your warehouse until they arrive at the final destination, no matter how many different types of transport they use along the way. It's fascinating to know that marine insurance is not a new concept. Its roots go way back to ancient times with civilizations like the Babylons, Greeks, and Romans already having systems to share the risks of sea travel. In its early development, the idea was simple. If a ship or its cargo was lost, the financial burden wouldn't fall entirely on one person. It was a way to distribute the financial risk of those dangerous sea voyages. The modern evolution of marine insurance, as we know it today, really took shape in the 17th century. At places like Lloyd's or the London Coffee House, this was where merchants or ship owners would meet to find people willing to underwrite or take on the risk of their voyages. Historically, the focus was mainly on what we call perils of the sea, risks directly related to the ocean, like storms, the ship sinking, or the collisions. But over time, as trade became more complex and involved different modes of transport, marine cargo insurance evolved to cover a much broader range of risks that your goods face today. So that brings us to the end of the day one. Before we wrap up, I'd love to hear from you in your own experience with international trade. What's the biggest cargo risk you have personally encountered, or perhaps one you have heard about that really highlighted the need of the insurance? Please share your thoughts in the comments below, and your experiences help us all learn. Thank you.